3 reasons the Australian dollar could decline in 2022. 3 paramount factors which buoy the Australian economy are combining to create a financially uncertain 2022. Interest rate to be a major issue. In federal election, cricketer Tim Paine resigns as Test captain amid sexting scandal. Mop-up begins after eastern states thrashed by deluge of rain. Biden-Xi climate change agreement, purely symbolic. Sky News host Paul Murray says interest rates will be a major issue in the upcoming federal election campaign, because hundreds of thousands of people are trying to get in contact. There are many factors that go into the price of a currency. Some are structural, like the external and fiscal balances. Others are more cyclic, like the level of interest rates. In the case of the Australian dollar, 3 factors are paramount. The price of commodity prices expressed as a percentage of our import prices, known as the terms of trade (TOT), is the first. The AUD has a long history of following this measure closely. In 2021, the TOT boomed and the Australian dollar rose, though much less than previous iterations. The Aussie dollar often follows TOT. The red line shows a forecast. Picture. Macro business. The TOT has now rolled over as China slows trade. Iron ore, the 2 coals plus LNG will fall heavily in 2022 unless we see more Chinese stimulus, which it appears loath to undertake. The second most important factor for the AUD is relative interest rates. If Australia is running higher interest rates than other countries, especially the US, then global hot money flows into local assets and lifts the currency. The opposite also applies. At the moment, Australia has a positive difference between interest rates versus the US, but it is neither large nor convincing. Spreads between US and Aussie bond yields. Picture. Macro business. Moreover, there are good reasons to expect higher interest rates in the US versus Australia over the next year. Inflation is much stronger in the US. Unemployment is lower and wages growth is much stronger. As well, Canberra intends to reboot wage-crushing mass immigration as soon as possible, and falling commodity prices also hit inflation hard. Finally, the Australian mortgage market is currently undergoing a material shock to fixed mortgage rates, which will slow local property markets and dent consumer confidence. All of these factors mean that US interest rates will likely rise faster than Australian in 2022, and that carry will reverse to a US yield advantage.